Welcome to the AI Chat Podcast. I'm your host, Jayden Schaefer, and today on the show, we have the pleasure of being joined by Carmen Li, who is the founder and CEO of Silicon Data. This is a company that brings transparency to the GPU market. She has created a real-time pricing index, benchmarks, verification tools, which is often called the Bloomberg for AI chips, and has a background at Bloomberg, Citi, DRW. She brings Wall Street data expertise with the fast-growing world of AI infrastructure. Super excited to have you on the show today, Carmen.
Good to see you too. This is very exciting.
Okay, so really excited about what you're building right now. I was honestly surprised looking into it that a product like this didn't exist before you had kind of come in and started working on it. So I guess for people listening, give a little overview of what you guys are doing with Silicon Data and some of the problems you're solving and maybe what got you into this area to begin with.
Yeah, excellent question. So Silicon Data we built to bring transparency, intelligence for the GPU AI industries. So the way we think about this is we believe compute as a resource will be the biggest resources for the humanity in the next decade or 2 or 3, will be bigger than all energy market combined. So we've been
Sure.
crude oil, electricity, natural gas. So we really believe in that would enable humanity for a better future. So how do we help? So some of the things that from joint fund, my experiences and also other industry, we want to facilitate a good risk management infrastructure. So that we're equivalent to financial tools, financial products, SaaS products. Everything can help bring transparency, efficiency to the industry. So give you quick examples, right? In today's world, American line of the world, they don't call OPEC for next 5 years oil contract. Nor do they just say, hey, we don't have to hedge. They just say what happened tomorrow, next day. We're going to charge your ticket prices based on oil prices. Right? They don't do that. We have consistencies because guess what? They hedge their cost structure, which is core oil. They do that efficiently, effectively through options and futures market. So it's very efficient, very transparent, and they can do it anytime they want. So the whole industry operate like this for oil, for electricity, for corn, for, pork bellies around the world. So everything's set up to be a very effective ecosystem. So the upside for doing that is you and me as end consumer, we don't really have worry as much about the volatility, nor do we have to pay for the expensive financing by those companies, right?
Yeah.
So think about this way. If we be back to the GPU data center role, right? If your capital infusion, right? You build a data center, you want to finance your GPU, your capital is coming from expensive capital sources, right? Private equity firms or large asset managers. They're looking for returns for the right reason. Then everybody in downstream will pay a higher cost, right? As a result. But if you get money from banks of the world, they have the cheapest cost of capital. Guess what? Everyone downstream will pay less for that as well. How do we help banks getting into the whole financing game? They need a lot more transparency, a lot better, robust risk management tool because they have different risk profiles. Right?
Okay.
So we have to help them to achieve that by giving more transparency, more third-party rankings and efficiency to do that. That's number one. Number two is for those people who either naturally long GPU or naturally short GPU, for them to manage my cost fluctuation, my revenue fluctuation. How do we do that? Again, those option futures. That's why we're creating the indexes, which now is live with both Bloomberg and also Refinitiv, so Reuters terminal. It's not tradable yet, but we are working to make it tradable very soon.
That is super, super cool. Yeah, this is an amazing point that you bring up, which is basically that if, these things cost more money, you're getting your funding from expensive sources that gets passed on to the customer at the end of the day. And so by being able to basically go from banks and cheaper funding sources, you're at the end of the day making the technology cheaper, which is, I think, not something that a lot of people connect the dots on how far upstream that goes to make an impact for consumers. So, but something that I'm really excited about, you kind of mentioned the fact that you have your new GPU price index. I believe in May this went online on the Bloomberg terminal. What kind of reaction did you get when Wall Street traders basically saw that you could see AI chips next to gold or oil and like what was the response there?
Yeah, it's a great question. So I think we started a company a year and a half ago. At that time, I think the world is divided into just two segments. You have people who are 100% into GPUs, design next gen chips, design alternative chips, design different architectures. And it's all very fun, very exciting. Love hardware breakthroughs, good for everybody. And you have the traditional financial services firms, right? Who are the hedge funds, the banks. They are aware of the situation, but they might not stitching up the different things together. So I was in between, right? I saw the GPU, I was close to hardware. Obviously, I was close to data, close to trading from my experience as well. So I definitely saw the two parts. So since last year, we've been rally up a lot of people from both sides to, hey, we can help both of you give the financial services and the hedge funds and the banks a lot more transparency. So now you know exactly the asset and the asset value and basically a third party certification of everything you're looking for, right? To help you enter and help and fuel the industry growth. Hey, GPU and then Longshore, the AI companies, we can help you hedging your volatility, just like American Airlines. Again, all those companies, how they hedge like electricity spend, we help you bring you to the ecosystem. So we have been doing that kind of sharing knowledge, insight, pinpoint, collaboration, brainstorming. So now I think people coming to, I would say, the middle ground to understand, hey, we can help each other, right? To create a lot of interesting synergies for end consumers just like you and me, right? So obviously the banks are interested, the hedge funds are interested, the big players, which they are very sophisticated, they understand how index works, they are very interested. So right now it's now a breaking news. We're cited in Bloomberg and in Wall Street Journals, and IEEE magazine covered us, which is
Wow.
IEEE, why do they care about us, right? Because they understand the importance of this. We in both print and also online. It's like 3 pages long IEEE magazine article, which is awesome. So
Super
they
cool.
definitely see the value overlapping the both industries. So it's really exciting. I think by the time we launch the products, we will able to generate the way we design it right now is how can we be most helpful, right? To help
Mm,
people hedging their volatility because we design from scratch. So
yeah.
everything is a fair game. For us is contract size, expiration day. Well, how can we do this the best, right? Obviously, we understand for index to work, we're lagged. Blackwell coming today, I'm just assuming today, we won't
Yeah.
have index till a few months later because we don't have numbers, we don't have
Right.
historical data sets, so we're still a little bit lagged. Right, so we understand that will be GPU is not a commodity like electricity, so there'll be correlation, but will be treated differently. People understand that, right? So by bringing both parties together, I think we're in a very good spot right now.
That's super cool. One of the challenges that I imagine you have to grapple with, and I'm curious how you guys are attacking this, is basically right now you're tracking, millions of GPU prices all over the world. How are you essentially making sure that that the numbers aren't being gamed and that everything's like accurate when you do that?
Yeah, that's a great question. Kudos to my previous experiences. We have a lot of experience dealing with different data sources, dealing with ETL, data qualities. I always say that. So we have actually essentially two products. One's index, one is alternative data. So in our mind, right? Let's say Jayden, you and me did a trade. You sold me some GPUs at retail, right? I bought it, right? So trade happened. Neither of us is very smart. Let's say we are not very smart. It's the wrong price, right? Suppose trade at this price, but you and me, we trade at a price that's say 20% below the market prices, right?
Okay.
Supposed to be a fair market value. It is a trade actually happened, right? It's not making up, it's actually happened. So this data point will be included in our alternative data ecosystem because it's true. A trade
Right.
happened. However, this trade number will that be applied to index settlement price calculation? May or may not, right? Depends on our algorithm, how we take the model in. Maybe we consider this is an outlier. It's not going to be part of our calculation for settlement prices, right?
Mm,
Maybe. So it depends on the actual transaction number and how we adjust it. But in the alternative data ecosystem, the data assets will be included. But in the index, may or may not impact data in the index itself because, hey, this may not be a valid data point, right? So I do want to separate out the two sort of data products we have.
Okay. Yeah, no, that makes a lot of sense, which honestly is so fascinating. Something that I've been kind of keeping an eye on lately, and I'd be just curious your take on is from what I've seen, it's looking like GPU rental prices have dropped by like 20% over the last year. I'm wondering, from your vantage point where you're kind of seeing all this data, are you seeing what is causing kind of a big swing like that, or maybe who's benefiting from that?
It's a great question. I think there was a huge shortage for certain chip types, namely H100, right, for a very long period of time. So if you believe in continuous shortage of H100, you might bought a lot at very high prices, right? Because you think,
Hmm.
hey, it's going to be continuous shortage, and you probably lost some money at this point, right? Because again, you're not making as much as you thought you would be. So that happens. That happens in gold. Happens in every other commodity. That happens. What's interesting in compute is, in theory, with human manufacturing, development technologies, per flop cost should go down, right? Ideally, it should go
Hmm.
down for everybody, but doesn't translate to per GPU per hour price because the GPU chips are different. Blackwell per GPU per hour will be more expensive than L40s, right? Because it's not per flop anymore. The way we try to help people hedge is by hedging their actual cost. You're not paying per flop, you're paying per GPU per hour most of the time, right? So your GPU cost, even though per flop gets down, doesn't mean that your unit price goes down with that. Because guess what?
Hmm.
Use more of this. Use better
Yeah.
GPU. Use thinking. Use more tokens for input-output tokens, right? So it's all different. So even though per flop should be going down, and it is going down, doesn't mean your GPU spend will be going down. Doesn't mean your unit cost will be going down. So that's one thing. And the second thing we're looking at is, to your question, right? How will the impact? Should be great for us, right? You think about, let's just assume you and me are regular users of OpenAI or cloud, right? Any
Yeah.
GPU, LMs. So we were hoping, hey, because for the infrastructure provider, their cost is going down because they're paying per GPU per hour, right? Then we should be benefiting from this. In reality, we're currently not. The token
Okay.
price is not currently going down. You can
Right.
argue their margin, right, is
Hmm.
widened. Maybe it's good. Maybe it's good. They need money for research. Maybe down the line they'll pass it to consumers. But either way, it's good for the industry because you lower the cost.
Right.
Supposedly, you can benefit more people if you lower the cost to the all the way to the end. Depends on the competitiveness of the market. Again, it's a whole theory of shouldn't be a monopoly, should be many players, so every consumer gets the benefit of the cost efficiency. But we'll see what happens there.
Okay, yeah, that's a great point. Because I'm sure like some people could say like, oh, today's a better day to start an AI company than last year because you're saving 20% on your GPUs. But of course, then you have to think about, if you started it a year earlier, how much more benefit your company has by
Well,
getting in the hands of consumers. And so,
exactly,
yeah,
it's all different, right? And you get
yeah,
really start advantage. Like you OpenAI knows exactly who you are, all your memories. Are you gonna train
yep.
cloud? Right? Tell them who you are. You can, but 5 years later, you probably just too much going on just to move everything. I don't know.
So one thing that I do think is like interesting, I think you guys have kind of shown from a lot of the data you've gathered that it is cheaper to buy GPU rentals on the it's the West Coast is more expensive than the East Coast. Why is that? And basically how can like people that are kind of smart buyers take advantage of that?
Yeah, that's a good question. So we've been looking at regional differences because in one of our calculation in our model is geolocation, not just
Yeah.
West Coast, East Coast, Midwest. It's also Finland, Iceland, Saudis, right? They all have different sort of weights on the geolocation. Sometimes people care about latency, right? You can argue for certain things and training, just let it do its thing. But sometimes people are impatient. You don't want to wait for 5 seconds for the response to come back to you. So it
Hmm.
depends on the use cases. People might optimize for wherever they are. And sometimes it's not an option. Right? There's a shortage. So you just
Yeah.
get your hands on whatever you can. Like we use GPU, a lot GPU as well. Sometimes we need a multiple nodes for certain configurations. We don't have a choice, right? And there's a lot of build-ups right now in all different places. Whatever weights it's on right now may change. Also, people argue electricity price, but it's really not a thing. Based on our analysis, doesn't really impact the GPU price as much as people would think. Availability is, right? It's a
Sure.
bottleneck, but doesn't mean that influence the price. So that's the two
Okay.
different concepts here.
Okay, that sounds super interesting. So at the beginning of the episode, you were talking a little bit about kind of comparing basically AI token prices and making them more like airline tickets. So like if it's off of a peak time, that'd be cheaper. If you were running a big AI company today, how would you basically change token pricing? Do you think you would reflect that? And also, do you think any big AI companies would ever do something like that?
DeepSeek's doing that right now. They started doing that a few months ago. So you can batch it and you can wait for off peak hours, you get a big discount for that. So it depends on your goal, right? So if your goal
Okay.
is to say, hey, this is my cluster, obviously I'm looking for 100% utilization. And I know when we all go to bed, not many people using this part of the world, maybe the other part of the world, people are waking up. Hey, why don't we offer that to them, right? How do we incentivize people by treating different hours? So demand supply is supposed to shift, but as your price goes down, people will queue their maybe certain use cases to the off-peak hours, just like how electricity works. So I think that would be the logical thing for people to do. Doesn't mean it's easy thing to do, right? Infrastructure-wise, scheduling-wise, even though you have that price schema coming out, doesn't mean you and me can adopt that schema right away. So these are all other considerations to make that the whole infrastructure work in that flexible sort of environment. But I think that people should, right, make things more efficient for everybody. Essentially, will help lower the cost, spread the cost, and lower it, and then create adoption. And then making things flexible and let market decide. Another thing I'm really so we'll have another product called is token index coming out as well. Not GPU
Okay.
index, but token index, right? So you think about it this way. If you think about how you and me, right, we decide which model we want to use, obviously it should be a market-driven decision. Like, if we as aggregate, marketplace, we just love X model over Y model, people start using more token. You can argue they should charge higher because they're more premium product, and then the market expressed its opinion, right? So if you let the token flow, it should be more expensive. And this product kind of sucked. No one want to buy the token, but doesn't mean the token should be worthless, right? Maybe it's cheap enough. People's like, what the heck? I'm doing 1+1. We have to use that one because it's cheap enough, right? So and let market express its opinion on anything. As a free market advocate, I think people should express their opinion on everything and then let the market adjust to the fair market value, its efficiency play for society. So I think in general, people should work towards that. And that's why I'm very against, even though this can be a very sensitive topic, is there are some countries, they have their own model and they, not forced, but they highly encouraged everyone in that region to use that model. Because, hey, even if you don't force anyone to use that model, no one can use that model. And that company, I guess, will not do too well. But then if you're forcing that company, which is profit independent company, to use a not great model, you're hurting their chances you're hurting the whole ecosystem's competitiveness in the world stage. You are not helping one company, you're hurting everybody in your region. It doesn't work in the long run. Right?
Yeah,
So let people compete efficiently in the free market, and then you can support them by give them, like GPU resources and best students from colleges and do all the right things. That's the best way to go, but not forcing people to use inferior products and hurting your whole enterprise, whole industry.
No, that's a great point that I really do not hear a lot of people bringing up, because we talk about a lot of different countries with different AI models in the United States and China and all over the world. And
the other companies are telling me they hate it. They are forced. They don't have options to use one model because of political reasons.
Yeah.
And was like, okay, we're not talking about adversaries, open source model here. We're talking about closed source models, but owned by different country companies, right?
Yeah.
It's all, I'm a free market believer. I don't think that's the right thing to do for that region.
Well, and I like your argument there because, you're not just saying just do it because it's the right thing to do and give people more choices. It's like literally hurting the company and the ecosystem because
other companies who had nothing to do with this, right? It just doesn't make sense to me.
That's a great point. Okay, so something that you said earlier really was interesting to me, which is basically giving more data to banks so that they can kind of underwrite lending to these companies buying GPUs and et cetera. One of your products, I believe, is kind of like a Carfax for GPUs. I'm wondering if you can explain what that is for. And I'm assuming, but is that basically to give more data for example, banks, lenders can understand the quality of the GPUs being bought and sold. So basically they have a better risk profile of the quality of the product.
Bingo. So today, right, the NVIDIA sales, I guess, kind of disappoint a lot of people. Their share price went down, right? So in the past, the NVIDIA sales, you can almost like approximate it to 100% market GPU activities. You buy from NVIDIA, they reflect their sales, that's the whole markets. And as we progress in the industry, right, I can argue NVIDIA sales may not be the 100% market activity indicator. Now you have Blackwell, and then let's say I'm cutting edge company. I don't want to use my A100 anymore. I can get rid of it. And then it's still amazing products. Some other
Yeah.
company want it. They're going to be a second-hand resale value, right? So there's a lot of things can move from brand new, right, wholesalers to potentially secondary sales in industries and markets. So you will see that start booming. So that is a very interesting market. A year old, 2 years old doesn't mean because the same configuration, just because the same vintage year, doesn't mean they trade same prices. Just like cars, right? We use it differently. Cooling is different parts of the world, different data centers. The racks are different. They all perform at different levels. How do you finance them? How do you evaluate them? How do you determine a terminal value? How do you depreciate them? It's 5 years, 8 years. So you need transparency and very good products to take 90 seconds to run a program, give you information, validate UIDs, tell exactly what's going on, and timestamp this in Data Oracle by third party to get the whole thing to more efficient rolling of the whole secondary market game. You can't just run ML perf and waiting for 5 days and hope for things work. And then the banks will hope that you don't manipulate the data at the end. Doesn't work. It's not efficient enough. It's not transparent enough. It's not fast enough for this world, right? So that's why Silicon Mark is so critical. We're heavily adopted by a lot of first tier already. We do up to 296 nodes. Each node has up to 12 GPUs. 90 seconds. We run all the tests to give you UIDs so we know exactly. Sometimes I won't call fraud. Sometimes it's just confusion, incompetencies. What do I exactly have in Finland? Like how many nodes? What is the version of Red Hat running on? Like people just not sure, right? So we clarify things right away. And then I believe there's a price for everything. Just because your quality is not the best doesn't mean there's not fair price for your products, right? We just need transparency. Again, I'm not going to tell you like, hey, what it is more factual. This is the number we run. You can run it. Your lender can run against you. Like, doesn't matter who run it. You get similar results in Data Oracle. You can compare that, timestamp it, in decay curve, just like how people do fixed income products.
Cool.
You can a curve, and then you can validate based on the curve. And then based on vintage year, we can give you, like, this is the valuation for your clusters. And then it's up to you and the financier to negotiate a price. But then both of you have the fair market value. It's like real estate, it's like cars, right?
Yeah.
And then it just becomes very quick transactions. Then me and you have to trust each other. Do you have a brand name? Are you part of big companies? Should I trust you as who you are? Not efficient. Again, not efficient. We need to move faster in a very credible way. That's why you need third-party provider like us.
Yeah, it's a fantastic solution, honestly, to a big problem. Something I'd love to ask you, basically, from everything that you're seeing and what you're working on in the industry, what are some common misunderstandings or misconceptions you feel like people in the industry are getting completely wrong right now?
I think people are very smart in the industry, right? They are incredibly savvy. People do want to do the right thing, right? So that's a given. I think one thing is extremely fascinating to me is everyone knows a lot about their world. Can be the GPU design, can be the configuration, can be deployment, can be cooling, but there are not many people because it's a new industry. No one knows the whole ecosystem extremely well, right? It's not like, farmers know how to hedge using soybean futures. Like farmers, literally, they know how to hedge it.
Yeah.
Right, in today's world, because everyone's so educated, right, in the ecosystem. Everyone's new. Even though everyone's very good at what they do, doesn't mean they understand the whole spectrum. For them to say, hey, I'm GPU expert. What is the future? What is the option? Traditionally, as a tech company, you don't have to hedge your cost. There's no cost concept. Right? But today, hey, guess what? Everyone have a big cost coming up, and they know that. The first intuition, like Meta, using cash and cash equivalents, good for you, have billions and billions of dollars. Spend your cash and cash equivalents. Is it the best way to financing ongoing projects? Maybe, maybe not. I don't know. But if you are not Meta, you don't have your cash and cash equivalents, how do you think about your cost? How do you think about your margin? Those are going to be, I'm not saying going to make or break your company, but that's how people sustain a generational company. That's incredibly important. Look at any other enterprises around the world. Assuming everybody want to make a generational company, you have to make things work. You have to control the fluctuation, volatility, and the risk. And that's not, you're not trying to gaming. You're not trying to say, hey, can I trade this and make tons of money by doing so? No, all you're trying to do is get rid of volatility, do what you do the best, which is creating products, create value for your customers, right? I
Mhm.
think one thing people should really get themselves familiarize is how to manage risk portfolios, risk management. Think about toolings that's efficient, effective, and cheap.
Yeah, no, I love that. I think that's spot on. Thank you so much for coming on the show and sharing your experience. As we wrap up, last question I'd like to ask you is, and I love to ask a lot of people this, based off of what you're seeing and what you're building, where do you see the industry basically changing? What are some of the advancements, the changes that you think will be seen in the next, let's say, 2 to 3 years?
That's a long time.
I know.
I feel like you
It's
say
so
two to
funny.
three months.
I know. Yeah, well, that's a good point. Yeah, I used to be like in the next 5 years, and I'm like, no, that's way too long. I've shortened it
And
to
you
two to
have
three, but I
to
still
you have
feel
to I feel like I think for smart people they can tell you 2 even 5 years ahead of time. And then for me, I feel like even for my board, I was like, I can tell next quarter. I'm not
yeah.
gonna like, do like extrapolation for next year. It's just a lot. I think we're gonna experience a lot of short term fluctuation, and it's gonna be very varied based on geolocation, sometimes for the better, sometimes for the worse. Even though I'm really optimistic in the long run,
Hmm.
humanity will get better. Everybody in a better place. Everyone will be longer, happier, more fulfilling life in the long run. I 100% believe in that. In the short run, I think there are pockets of people, maybe big pockets of people, will have very destructive lifestyle because of
Hmm.
whatever we're going through. I don't think it's new to humans, but I guess that if we do some historical studies, some humanitarian historian probably will tell you when electricity got invented, how people don't have jobs. When cars got invented, maybe the horse, whatever, carriage riders
Yeah.
probably lose jobs, right? So I don't know what happened then. What did the government do? But right now, you see layoffs, waves and waves. I heard from a lot of executives around the world going to be layoffs in customer support and other things, and those jobs may not be in the U.S. We might not even here.
Hmm.
Can be the whole village will be losing their jobs in next
Hmm.
months in some parts of the world. What happened to those societies, those communities, right? Because they're very concentrated. Their skill set is
Hmm.
concentrated. The nature of job is concentrated in those pockets of the world. What happened to them? Don't know, right? So I think we'll see a lot of silent sufferings that might have a lot of societal implications for that.
Wow, yeah, it's true. There's so much change, and I think like you, I'm also very optimistic in the long term that long term we're seeing this massive productivity gain. The global standard of living, I believe, will be raised for everyone as we're able to do more with less. But yeah, it's really tricky to basically thread the needle on in the short term. How do we make sure that everyone is taken care of? How do we make sure that people have the resources to find new jobs and new opportunities? And what are like a lot of new jobs and opportunities in industries are getting spun up. One of my neighbors, for example, his company's exploding because he used to, or he like installs gas tanks. And all of a sudden, every data center around needs these huge industrial gas tanks for their backup generators for their data centers. So his business is exploding, right? So there's
That's awesome. Electricians, right? That's your point. There's a
exactly,
lot
there's
of people
all
are
these industries that I think
benefiting.
we'll see some big benefits, and it's so hard to predict what all the knock-on effects are. But I think long term, I'm optimistic, and in the short term, yeah, definitely something to watch out for. But Carmen, thank you so much for coming on the show, sharing all your insights and everything you're doing. It's really exciting. If people are interested in learning more about your company and kind of what you're doing, what's the best place for them to find you?
Yeah, thank you. SiliconData.com. So it's easy, SiliconData.com. Yeah, you can find me, you can contact me, find me on LinkedIn, Twitter. I'm happy to answer any questions. Again, we're a very young company. We're always growing and hiring. Sometimes we don't have a job posted, but you're excited about the data side and financial products and GPU benchmarking side, and we love to nerd out together.
Super cool. Okay, well, thank you so much for coming on the show. To the listener, I'll leave links in the description to her site so you can go check that out. And as always, thanks so much for tuning in. Make sure to leave a rating and review wherever you get your podcasts, and we will catch you in the next episode.